Welcome to Financial Planning Explained. I'm your host, Mike Menninger, certified financial planner, owner and founder of Menninger and Associates Financial Planning. I'm joined here with two folks. First, I got Kyle Ryan, also a certified financial planner and one of the equity owners of the company. And more importantly, I've got my guest today, Steve Gannon, owner and founder of Gannon Insurance. Steve, welcome.
Thank you. I appreciate the opportunity to be here.
No problem. Kyle, thanks for joining me.
Yeah, thank you.
So Kyle has a relationship with Steve. They know each other pretty well. So I figured I would have Kyle join, not to mention the fact that obviously two heads are better than one when it comes to peppering somebody with questions. Now, it's all in fun. So Steve's agency predominantly works with property and casualty insurance. And property and casualty insurance is something that is a critical component of financial planning in that it's risk management, but it's something that we're by no means experts at. And we defer to those people who are experts, which is why we wanted to have Steve on the show today so that we can at least discuss the different areas of property and casualty. So tell me, what do you do? Like, what do you, sir?
Sure. So we're an independent insurance agency, and we handle property and casualty, like you said. So what does that mean? So for personal insurance, we handle auto insurance, home insurance, condo, renters insurance, and umbrella insurance. But we also handle if people have a rental home or investment home, seasonal home, we do that as well. And in the realm of commercial insurance, we do commercial auto, general liability, workers' compensation, and then a couple areas that I feel are extremely important because the other ones are very common, but cyber liability and employer liability. So we handle all those aspects of insurance.
Well, cyber liability is something that's very new, but what is employer liability?
So employer liability covers things that like a general liability or business owner's policy does not cover. So that covers like unlawful hiring, firing, discrimination, harassment suits. So
really,
if an employer insured has employees, it is important to have employer liability. In most cases, we can just put an endorsement or rider on the general liability policy, but there are certain occupations that the carriers won't allow that for. And for those occupations, we just do a separate policy altogether.
Interesting. I'm going to want to learn more about it.
Yeah, we already taking notes to make sure we follow up on it.
Yeah, no kidding. The things honestly, I don't even know whether or not we have cybersecurity here as to whether or not it's part of our errors and omissions. We have all kinds of different insurance types of policies, but you know what? You're just reminding me that it's something that, we do as I say, not as I do. And this fits the perfect example of we really need to be taking a look at all of our professional insurance lines. So you'll be getting a call sometime really soon with regards to that. One of the biggest things more recently that we've noticed is, us in the wealth management, among other things, is inflation has been a big problem over the course of the past 5 years. It's waning, but following COVID, inflation ran rampant. And one of the things associated with it is one of the components that, or shall I say, the most impactful component on inflation was property and casualty insurance, automobile insurance, and homeowners insurance. Looking at all the different categories, some were up 2%, some were up 5%. But as I recall, they were running at 40 and 50%. And obviously, people don't know that. All they see is that their bills are going up.
Right.
And chances are you're the one who's taking the wrath of it. So care to explain? Talk about it.
So since COVID hit, I will say the increases in insurance have been as severe as I've seen over the last 30 years I've been doing insurance. It's been crazy. So part of the reason is all the inflationary pressures certainly factor in. So for every auto claims, they're paying more for every car part, supply material in relation to fixing cars, as well as labor rates. And the same thing translates over to property insurance. That's for not only homes, but commercial buildings. Everything has gone up. Every material from your building supply stores, everything has gone up. In certain cases, it's gone up 10, 20, 30%. In certain cases, more. And I know some builders, some of it's come down. But that translated into every auto and home claim and property claim has gone up. So if a carrier on average was paying $3,000 for your average auto claim, I'm pulling that number out of the air, pre-COVID, put a 30 to 40% inflationary factor on that. So everything's gone up. So when the carriers have at the end of each year, they have a combined ratio, if they're profitable or not. For every dollar they're taking in over the past 3-4 years, they've been paying out anywhere from $1.05 to $1.15. So that just translates into them increasing rates for everyone, which nobody likes. Me and my team don't like, because people are frustrated when their insurance rates are going up, but we don't make that determination. The insurance companies do.
And the insurance companies aren't going to stand there and just lose money year after year.
Correct.
Right? So it finds its way to the consumer, as inflation often does.
Exactly right.
So when you see that, your clients, consumers in general, are getting squeezed, right? Inflation's hitting us all across the board, not only just insurance in other areas as well. Are you finding that people are doing more, basing their insurance searches off of just price alone? Are they sacrificing coverage to lower the limit? And what are the risks that you're seeing there?
Yeah, and in certain cases they do, right? So, in the world of insurance, like many things in life, I tell people cheaper is not always better. You're not going to be happy if I sign you up for auto and home insurance and I save you $200-$300 and you have a claim 6 months or a year later and you find you have cut rate coverage.
Yeah.
So we don't operate that way. We always want to get our coverage, our clients, the best coverage for the best premium, right?
Yeah.
So each year we do what we call a protection review or a renewal review with our clients. We want to see if anything's changed, if they've done any renovations or additions to their home, but also if their rates have increased. We're an independent agency. We're going to check it with our other 15 insurance companies and make sure that they're still with the best carrier. And there's been plenty of times where we will say, you know what? We do have 2 other options here. Right now you're with this company, but here's 2 other options, and we'll discuss pros and cons of switching. Sometimes they want to switch, sometimes they don't. But yeah, just getting a cheap policy, of course, I don't recommend that, obviously.
And that's sorry to cut you off. And it's a good time to reiterate or just mention that you are a broker, right? So you're not tied to one carrier alone. You can search out the best policy for someone for what they're seeking.
100% correct. Yeah, we're an independent agency, so we're not tied or married to any specific insurance company. We've handpicked the insurance companies we deal with, but we always want to make sure we're getting our clients with the right carrier at the most competitive price.
And does that mean you can work anywhere in the country? Does that mean you're local?
We are local. So, we're licensed only in PA and New Jersey. They're the 2 states we handle property and casualty in.
Right, because you're located in Bensalem, which is the eastern side of Pennsylvania.
Correct.
And you're pretty much right close to the border of New Jersey.
Exactly right. Yeah.
So one of the things that you brought up that made me think about it is that really ought to, and this is just reminding me that I need to do the same, is that your clients need to be reevaluating their coverage simply because, let's say the person buys the average home for $400,000 5-6 years ago, that home is now $600,000. And if it's still insured based on the $400,000 and it burns down, guess what? They got some problems on their hands.
Yeah.
Are the mortgage companies, because of the fact that the mortgage doesn't matter because they're going to get their money. What are you doing about that? Has there been a demand? Are you approaching your clients to say, hey, we need to look at your coverages and evaluating values of properties? How do you do that?
Yeah. So like I mentioned, we reach out to all of our clients each year for an annual renewal review. But one thing that you mentioned, we don't insure homes. No insurance company insures homes based upon market value. So market values have absolutely skipped up, as have the cost of building materials and supplies. So all the insurance companies do put an inflation rider on the home policies year after year. Some years it might be 1 or 2%. Some years, with what we've seen of late, it could be 6 to 12%.
Yeah.
So that does help with some of that. But we do also update. All the insurance companies have a replacement cost evaluation tool that we use when we're writing a new policy, and we'll do it at renewal time as well, depending upon. We'll ask our clients saying, hey Kyle, we always want to check in if they've done any renovation or addition. That's always a trigger. We want to update that replacement cost evaluation, because let's say they didn't have a finished basement before they do now. We want to factor that in. Let's say they replaced all their carpet in the home with hardwood flooring and it cost them $20,000. I one of my clients who is in the medical profession, he renovated his kitchen. It cost him $150,000. So we want to make sure that that home is insured properly. God forbid there's a total loss, that they're going to rebuild it the way they had it.
Yeah.
Right?
You're raising all kinds of things, but you're making me want to pick up the phone and call my insurance company immediately after I get out of here. But you referenced inflation rider. It's a very interesting concept. Is that automatic with all insurance companies? Like, for instance, we went through that period of real high inflation. Is that automatically going to happen that, say, hypothetically, 5 years ago, as I pointed out, the value of my home was $400,000? Are they automatically increasing that?
Most, I can't say with every carrier, but most carriers that are offering replacement cost on the home have that inflationary rider, correct?
So it's
Most
automatic, and and their inflation is based on CPI or just an automatic 2 or 3%?
I don't know what they base it upon because they make that determination, but obviously the current factors affect it.
And it does vary each year, right? So you
Correct.
mentioned 6-12% in the 2022, 2023 range. Yep.
Yes, correct. And one thing you mentioned as far as, again, you bought a home for $400,000, it's now worth $600,000. So the first 7 years of my insurance career, I did claims. And if a home is underinsured, in the event of a total loss, there is a thing called a co-insurance penalty, in which case you may not be made whole. I remember a claim way back, in the 90s when I was doing claims, and the home was underinsured by a couple $100,000. And in the end, I think the insurance company paid that homeowner, that insured, 70 to 75% of the loss.
Really?
Because they were underinsured. So that's why you don't want your home underinsured. Obviously, you want to make sure you tell your agent or carrier when you do a renovation or addition. That's important.
Yeah, I'd say so, for sure. The example that you used with the kitchen, and we have clients that do that. So we should really be recommending to our clients to review. How often do you recommend clients review their coverage on their insurance?
I think an annual check-in makes sense if it's possible. But certainly if they've done any kind of dramatic renovation or addition to their home, don't wait for the annual review. Reach out. Let them know.
Do you find as a broker that sometimes, and I'm going to pick one company, Travelers, and I'm not picking on Travelers, but they may be one of your carriers. Do you find sometimes that one carrier all of a sudden starts jacking up its rates more than the other carriers, whereby you may have clients with that particular company and then you want to switch them?
Yeah. I mean, there are times where a specific carrier, rates are going up, let's say across the board, but one carrier is going hog wild. So yeah, and if we have a bunch of clients with that carrier, we'll proactively shop rates and let our clients know hey, look, XYZ carrier's rates have been going a little crazy here. So now we have 2 or 3 other options for you. Absolutely.
And could that just be a function of the insurance company no longer wanting to carry that line of business for a certain amount of time? Or, is there other factors that go into why a specific company might be raising their rates?
They don't always tell us the reason. So I think that's possible, but it could be that, they're getting hit throughout the country on losses and they're looking to just put a Band-Aid on the bleeding. I mean, there's been times where carriers, national carriers have basically put a moratorium on new business recently. One of our carriers, they weren't writing business for over a year and a half, and yet I see their commercials on TV, which is frustrating. So sometimes they're trying to get their losses in check, and they're not taking on any new business, because usually new business runs a higher loss ratio or temperature, as they say, than long-term clients.
Yeah.
So sometimes they do that to stop the bleeding.
I've also seen, just with insurance and just speaking with other insurance agents, kind of following up with Kyle's point, is that insurance companies may want a particular type of business and they almost underprice it to be able to gather and build a portfolio, whereas there may be lines of business that they don't want, and they'll sort of jack up the rates to get, naturally people say, I don't want it. And that's their way of getting rid of a particular line of business.
Yeah, sure. It does happen. Absolutely. I mean, I find when a lot of carriers come into this state, because we brought on carriers who are new to Pennsylvania, and a lot of times they come in looking to buy market share. They're underpricing, and almost always within a year or two, the rate increases come along, and then you either have to move those clients to another carrier. So it is frustrating.
And hence the value of a good broker.
Yep.
The other thing too that has impacted inflation is not just inflation itself, but the impact to the carriers is when we have these natural disasters.
Yep.
Take California, with all of the wildfires. You take the flooding that they had in Western North Carolina.
Yes.
And Florida. Florida's getting bombarded with hurricanes, which my understanding is that a lot of people are moving out of Florida because their flood insurance is either non-existent or the prices are so high that they can't afford to carry the property. And so what they'll do is the insurance companies will raise the rates. So like I'm paying for the darn wildfires in California with my rates because I have to fund the insurance company.
Right. Yeah. So, we have some carriers who are national carriers. They're across the country and they're in states like California and Florida and, Texas and Louisiana and stuff like that. And then we have a bunch of local regional carriers who aren't in those states. But even the carriers who are regional or not in those states, reinsurance is affected for all the carriers. So to some degree, it does affect all of us, but it still affects those carriers who got hit harder in those respective states are typically going to pass it along a little bit more to their clients than those regional carriers who aren't in those states. But they still will to a degree because of reinsurance, which affects all of them.
Interesting.
Yeah.
This is a good breaking point. Stay tuned. We'll be back with you in just a few moments.
Do you keep up regularly with your investments? Where exactly are your hard-earned dollars going? Are you financially prepared for an emergency?
I'm Mike Menninger, founder of Menninger & Associates Financial Planning. We believe that education and knowledge are powerful, and we want our clients to understand why we are making the recommendations that we make. It's your money, and you deserve to know where it's going, because it's not how much you make, it's how much you keep. So call us today to discuss your financial concerns. Welcome back to Financial Planning Explained, and we're continuing on with Steve Gannon, and we're talking about the property and casualty insurance. And one of the things that we want to talk about now is full tort versus limited tort. And I know that I never really understood it until I heard someone had a situation, they had limited tort, and that said, full tort for this guy. However, full tort is also significantly more expensive. Now, does that apply only to automobile insurance? Is that, or home as well?
In Pennsylvania, everyone has to choose limited tort and full tort. So it is for auto insurance only. It has to do with your right to sue for pain and suffering. So
Thank you. Explain full tort versus limited tort.
So with limited tort, you're not barred from suing. It just means let's say you're stopped at a red light, someone hits you. If you're injured with limited tort, you can only sue for pain and suffering if it's a real serious injury. Now, attorneys fight all day long. What's real serious? So it is a little bit dicey, but certainly for soft tissue injury, you would not be able to sue with limited tort. But people can have lifelong pain with soft tissue injury for sure.
Yeah.
There are a couple exceptions. Like if the other guy's charged with DUI or they have out-of-state tags, you automatically get relegated to full tort. However, with full tort, if someone hits you and you're injured, you can sue for pain and suffering, whether it's a major or minor injury. Price difference-wise, it's usually somewhere around 20% of the overall premium difference. Now, sometimes I find that percentage could be a little bit higher in the city of Philly as opposed to the suburbs, but it's not insignificant. And in Jersey, it's similar but different. They don't call it full and limited tort. They call it verbal threshold and non-verbal threshold, but same premise.
Yeah.
One gives you the right to sue and one it's more difficult to sue.
So you mentioned someone with out-of-state tags hits you and all of a sudden, you could be bumped up to full tort, however that works. But I have full tort in PA. Does that mean I have full tort? If I go, I go to the shore, I go to New Jersey, Am I carrying full tort with me?
So now there is a thing called the Deemer statute. So for about 99% of insurance companies, once you cross the bridge into New Jersey, even if you have full tort in Pennsylvania, you go down to limited tort in New Jersey because of this Deemer statute. Now, the two of our carriers are the only two that I'm aware of. You will stay favorable for the Deemer statute, meaning you will maintain full tort even in the state of New Jersey. So I insure a number of attorneys who will only be insured by one of those two carriers. Most people aren't even aware of it. I've even talked to attorneys who aren't personal injury attorneys who've never heard of that. So it is an important consideration.
We've got clients who, they live in PA, they live in the outskirts of Philadelphia, you name it, but they have shore properties. They go there, in the summer on a weekly basis, right? So this is something that we certainly weren't aware of.
It's definitely an important consideration. It really is.
Yeah. You think full tort's worth getting?
My job is not really to tell people you have to have full tort. I want to make sure they're properly covered. When they ask me, I say, I do recommend it. There's so many aggressive and dangerous and bad drivers on the road. I'd rather be properly protected. I think it's worth it. Again, it's a little bit more expensive and the higher percentage of people have limited tort because of pricing, but I do think full tort makes sense.
What's that saying? It's you rather have it and not need it than need it and not have it.
Well, there's that one. And the thing is I always say is that Nobody likes to pay insurance. I don't care what the insurance is. Nobody likes to pay it. Yet, anytime there's ever been a claim, I've never heard anybody say, I am overinsured. Okay. But
right.
you hear underinsured often. Now, that brings up a very important question that I don't really understand, which means the viewers probably don't understand. What happens if I get into an automobile accident with someone, and it's not my fault, okay, but they're either uninsured or underinsured? Now, I know with my automobile insurance, one of the coverages is underinsured or uninsured, but it's usually some minor dollar amount. Does that mean, explain what that means?
Sure. So if someone hits you, and they don't have enough insurance or any insurance, you can come through the collision coverage in your car to get your car fixed. However, uninsured and underinsured has to do with pain and suffering. So if you are injured and you're making a claim for pain and suffering and that guy who hit you doesn't have insurance, you can come back to your policy under the uninsured motorist portion. Or if he has state minimum, and let's say your injury is worth $100,000, state minimum is $15,000 per person, underinsured motorist will pick up the difference.
Yep.
But that typically doesn't seem to be very much as far as the underinsured coverage, as opposed to all of the different coverages that I have on there. That seems to be one of the lowest coverages. How often do you find that it is needed and that the limit is not enough?
Well, the best you can do with uninsured and underinsured is mirror or match your liability limit. So if someone only has liability limits of $100,000 per person, $300 per accident, uninsured and underinsured can also be $100 and $300.
Okay.
But if you do have multiple cars, you can add stacking, which is good. So if you have 3 cars with stacked limits, your limits for uninsured and underinsured are now triple.
Oh.
If you have 4 cars with stacking, they're quadruple.
Right.
The stacking's something that, I don't have multiple cars on my policy, so it's not something I get to benefit from. Can you
Correct.
talk a little bit about stacking? Because I've heard that's one
Yeah.
of the best ways to take advantage
Yeah.
of a policy.
So, it does increase the premium, make no mistake. So if someone's got, 250, 500 limits, full tort with 4 cars and maybe a teen driver or 2, uninsured and underinsured, it's not going to be like a low dollar amount, but it is an important coverage because as we discussed, there's a lot of bad drivers on the road. So, you're protecting yourself more by having limits that match your liability limit. And then if you want to really take it to the next level, stack it.
Yep.
And you're just protecting yourself. You're protecting your earning potential in case you're injured and can't work for a while. So it is a very important coverage that a lot of people don't have enough of and don't understand.
Well, it's interesting because now I've got 3 vehicles under the policy. And let's just assume, for instance, they're not stacked and I have 100,000 on each one. But if I stacked them, I effectively now have 300,000. Is that cheaper than my going and just getting 300,000 on each vehicle? It's got to be.
It typically would be, yes.
Okay.
Yeah.
All right, good to know.
Of the different, we talked a lot about home, auto, umbrella. Where do you find that people are most often underinsured?
I find a lot, it could be a number of areas. On a home policy, I find a lot of people might have a finished basement. They might have 5 or 10,000 for sewer and drain backup, which is not an uncommon claim. Bad rainstorm, water backs up to some pump or drain line. For an unfinished basement, we recommend at least 10,000 because, the cleanup bill from one of those restoration companies can easily be several grand to almost 10. But if you have a finished basement, a starting point should be no lower than 25,000 for that coverage and maybe at least 50 because we know how much it costs to get our basements finished. Another coverage on a home policy is service line coverage. That's the water pipes from the front of the house out to the street that back in the day, you couldn't even put that on a home policy. That's available now. A lot of townships offer it. So to me, it doesn't matter whether you have it through the township or your insurance, but it's just good to have. Right. And of course, making sure you have sufficient liability limits and that the dwelling limit's insured to where it should be. So there's a lot of stuff on an auto policy. We discussed having proper liability limits to making sure you're properly protected, good uninsured and underinsured motorist limits, but also an umbrella policy.
Yeah.
A lot of people don't have umbrella policies, which is really pennies on the dollar. That's extra liability coverage over top your auto and homes. That if there's a bad claim or accident and someone's coming after you with all they got, that you don't want them coming after your assets. your future earning potential, right? You want to protect everything. So you get an umbrella policy to do.
It's amazing with umbrella policies. I'll be talking to a client and be like, hey, you should talk to your property and casualty person and just, hey, you should consider this, right? Get $1 million. I'm like, $1 million? That's going to cost me so much money. They get the quote back and they're like, wow, that's way less.
Like 150, 200 bucks a year.
Yeah. I mean, and if you have just, 2 cars, 2 adult drivers, 1 home, it could be a couple $100.
Yeah.
I mean, they've also gone up in price. So I'd say more commonly these days, it could be $300-$400. And then, of course, if you have teen drivers and such, it'll be more. But it's really not that expensive. It gives you a lot of protection for a pretty low price.
And I remember growing up, we had a trampoline, right? So trampolines, a lot of injuries come out of trampolines. And we live in a litigious society.
Yeah.
If someone has a trampoline, a pool, they have people over all the time. Is that something where you really would want to recommend having that extra protection?
100%. Yeah. I mean, these days, most insurance companies do inspect. So if you got a trampoline, a lot of them require that it be netted, which most of them are now.
Mm-hmm.
Back in my day growing up, they weren't, of course. So a netted trampoline, ideally inside a fenced yard, because there's been claims where if you have an unfenced yard, kid comes on your trampoline, usually gets hurt, they can still sue you. It's an attractive nuisance. It's crazy. So when you have extra exposures, teen drivers, trampoline, swimming pool, dog or dogs, you absolutely, it's
even
that
a
much
sidewalk,
more
with a curb that's just sticking out, something like that, right?
That you should want to be proactive doing that, because you can, without even having to replace it, you can have someone come out and make it not as much of a tripping hazard. But for all those areas of concern, you definitely should have an umbrella policy. Absolutely.
Yeah. Well, there's a lot. You know what? There's a lot we can talk about, and we're pretty much wrapped up with this particular episode. So let's pick up with another episode. Thank you very much for joining, Steve. And we're going to pick this up with another episode.
Do you want to give your contact information? We'll do the book one.
Absolutely. So Steve Gannon of the Gannon Insurance Agency. You can reach us at www.gannonagency.com, or you can call 215-891-9990. And then my direct email is steve@gannonagency.com.
Awesome. Thank you. So we'll be back. We're going to talk more about property and casualty insurance and other things that are little known. So thank you for joining us, and we'll be back with you with the next episode of Financial Planning Explained. Thank you for joining. Thank you for watching this episode of Financial Planning Explained. We strive to provide an educational experience for all of our viewers, and what we struggle with at times is topics. So if there's an idea or a topic that you would like for us to discuss on a future episode, please email us at admin@maaplanning.com, or you may enter it on the Contact Us page on our website at www.maaplanning.com. Thank you in advance for participating and helping make our show successful.